Start by understanding what qualifying plant expenditure, or QPE, really means for businesses in Malaysia. QPE refers to the capital expenses a business incurs when acquiring, constructing, or installing plant and machinery that are used for business purposes. These expenses are important because they qualify for capital allowances under the Malaysian Income Tax Act 1967, specifically Schedule 3. Instead of deducting the full cost of these assets in the year of purchase, capital allowances allow businesses to claim tax relief gradually over several years. This helps companies manage their cash flow and optimize their tax savings. It's a crucial part of tax planning for any business investing in equipment or machinery. Now let's look at what actually qualifies as plant and machinery. These are assets used in generating business income, such as manufacturing equipment, office computers, printers, air conditioners, and vehicles used solely for business. However, not everything is eligible. Land and buildings are generally excluded, except for certain industrial buildings. Also, assets used mainly for personal purposes or expenses related to repairs and maintenance do not qualify as QP. It's essential to distinguish between qualifying and non-qualifying assets to ensure you're claiming the right allowances and staying compliant with tax regulations. Keeping these categories clear helps avoid costly mistakes during tax filing. Understanding how capital allowances are applied is vital for maximizing tax benefits. When you acquire a qualifying asset, you can claim an initial allowance, typically 20% of the asset's cost in the year of acquisition. After that, you claim an annual allowance each year on the asset's reducing balance. The rate depends on the asset type. General plant and machinery usually get 14%, while special machinery can get up to 20%. For example, if you buy a machine for RM100000, you claim RM20000 as IA in the first year, and then RM11200 as AA the next year. This gradual deduction helps spread out tax relief and supports better financial planning. You dispose of, sell, or scrap a qualifying asset, a balancing adjustment comes into play. If the disposal proceeds are less than the asset's tax written-down value, you get a balancing allowance and extra deduction. If the proceeds are higher, a balancing charge is added back to your taxable income. Additionally, some assets like energy-efficient machinery or automation equipment may qualify for accelerated capital allowances or special tax incentives. These incentives can further enhance your tax savings and encourage investment in modern, efficient technology. Always check if your assets are eligible for these special benefits to make the most of your capital investments. Wrap up: proper record keeping is essential. Always keep detailed records of purchase dates, costs, and how each asset is used. Make sure to separate qualifying plant and machinery from non-qualifying assets and apply the correct initial and annual allowance rates as per Schedule 3. Don't forget to include any balancing charges or allowances in the year of disposal. By following these steps, businesses can ensure compliance, optimize tax savings, and make informed decisions about capital investments. Remember, QPE is not just about tax relief, it's about smart business planning and maximizing the value of your assets.